Asterdex is above $2 again. The question is, what's a fair valuation for the hyperliquid competitor? There seems to be an invisible ceiling. Is that justified? Let's have a look at the on-chain data. Let's have a look at the metrics most people are not considering. So we're currently at $2.05. We've been talking about Aster when it was close to 60 cents. Feel free to check out prior videos on this channel. But it seems like the market stops buying at the $2 mark. Why is that? Now, Asterdex is a decentralized perpetual futures exchange. So that's an exchange that allows to bet on cryptocurrency prices with leverage. Now, the most successful and most widely used perpetual futures exchange currently is Hyperliquid. The market as a whole is growing very rapidly. This is the trading volume on all decentralized perpetual futures over time. 1 year ago, we were at around 5 billion trading volume per day. Now we are above 30 most days. The market is split across various exchanges. The red area we see over here, that's Hyperliquid. So it's not just trading volume, it's not just arbitrage bots that use the platform because of the low fees. There's actually long-term positions that now get opened via the perpetual futures over the spot market. We see this over here as an example. This is the open interest, so how many bets are currently made on the Ethereum price. So just as an example, the open interest has grown massively, much faster than the price did. So really there's more leverage entering the space, and that's potentially also a risk. This is the total value locked across all decentralized exchanges, across all decentralized exchange applications and all blockchains. And we had our DeFi summer in 2021 and then the subsequent collapse with Terra Luna, where a lot of hidden inherent leverage suddenly unwinded with the UST stablecoin that then depegged. Now again, we see another wave of inherent leverage that expands the total value locked of decentralized finance. This time it's not stablecoins, this time it's perpetual futures. But let's go back to Asterdex. Now, Aster is a competitor to Hyperliquid, the market leader, that gets supported by Binance. There's a lot of usage of the platform. For example, the fees are slightly lower for Asterdex if you don't use any staking on the Hyperliquid protocol. So the taker fee is 0.04% on Aster, and on Hyperliquid that's 0.045%, so more than 10% more. The makers get an even bigger discount. So here, if there's no staking and very little trading volume, it's 0.15% per transaction, and that's only 1/3 on Aster. So really, the market makers are now getting incentivized to onboard to Aster. So there are the lower fees, but there's also the airdrop. And the airdrop might be the reason why we got this inflated trading volume here. The trading volume on Aster went up all the way to 20 million per day. And on Hyperliquid, this tends to be only at around 4 million per day. Now, there has been a sharp drop. Just have a look at the recent data. Why did the trading volume collapse from 17 million to only 3, which is still very close to what Hyperliquid is doing, but it's nowhere near to what happened before. Again, it's the airdrop. So the airdrop stage 2 closed on the 5th of October. So now we know the trading volume after the airdrop. It's still relatively close to what's happening on Hyperliquid. So then maybe the valuations should be the same, right? Well, Hyperliquid's market cap is at 13 billion. Aster's market cap is only at 3.5 billion. So Hyperliquid still demands a 3 to 4x premium over Asterdex. The fully diluted valuation ratio is similar, as in it's 16 billion for Asterdex and it's 46 billion for Hyperliquid. Hyperliquid is 3 times more expensive. Here's the total value locked on Asterdex. So even after the airdrop, this is not coming down. Here's the total value locked on Hyperliquid at a very similar level again. Both of them are at 2.4 billion. And so either Hyperliquid is massively overvalued or Asterdex is massively undervalued. The valuation gap doesn't make too much sense long term. The capital that's in the platform is comparable. The trading volume that's in the platforms is comparable as well. The market caps are not comparable at all. Now here's the Asterdex relative to Hyperliquid chart. And again, We have been trading in a range for a while, but I don't think that this range will prevail. I do think that at some point Asterdex will outperform Hyperliquid, simply because it's currently so much cheaper, relatively speaking. This here is only a 100% increase, but potentially there's even 200% outperformance possible. Let's have a look at the on-chain metrics. So we've got 151,000 holders of Asterdex on the Binance Smart Chain. This is where the token is listed. On the left, we see the number of wallets that have at least 500 Aster tokens. So it's roughly $1,000 worth of the token. In the middle, it's roughly $10,000 worth of the token. On the right, it's roughly $100,000 worth of the token. We can see a drop in all of those metrics after the airdrop cutoff. But the drop isn't really that large for all of those wallet cohorts. Yes, there is some leverage in the asset. It's 1.4 billion, which is quite high relative to the market cap. It's higher than what we have for Hyperliquid. But what we can already observe with Hyperliquid is that many people buy the token simply via perpetual futures on the platform. So this is different to other short-term pump and dump assets. Usually perpetual futures open interest is short-term capital that enters an asset and then very quickly exits again once momentum turns around. But when it's about a perpetual futures exchange, then maybe it's simply the users of the platform that want to make long-term commitments towards the asset with leverage, potentially also betting on outperformance, right? The chart that we look at here, it can be turned into profit by going long Asterdex and short Hyperliquid at the same time. Now on this channel, I try to approach crypto differently to most other YouTubers. Most YouTubers, they just read the news or they try to find the next hidden gem that does a 100x return. But really, to survive in crypto long term, it's about compounding. It's not about finding the next 100x gem. It's simply about generating alpha consistently. So this is my personal trading performance compared to just dollar cost averaging into Bitcoin. So because I follow a fixed rule set on how to trade, I haven't necessarily made a 100x return with a random moonshot, but instead I simply just kept on growing the capital over time. Dollar cost averaging into BTC is this line in gray, by the way, and my portfolio is the line in black. And so I'm working on various back tests. I try to find out what kind of trading rules actually work. And this is the result of the back test. It's not my trading result, but it's based on an optimization of moving average durations and an optimization of leverage as well. So this is a linear scale. Here we've got the same on a logarithmic scale. So the Bitcoin price is in white and the back tested return is here, this line in turquoise. And there's two reasons why I like this. First of all, the drawdowns are less compared to buying and holding Bitcoin. So we've got less risk, but also the performance is much, much higher, right? Each of those horizontal lines is a 10x. So this was more than a 10x delta during the testing period. And so I set up a capital pool. I put in my own money as well, and any premium member can contribute towards that pool as well, and then hopefully get this return as well, right? We are following exactly this fixed rule set that made this backtest happen. We don't know if the things that worked in the past will still continue to work as well in the future, but it's our best bet, and I think it's superior to just following news or following the gut feel. So I'm in it with 150k. The start has been already quite positive, and of course what's behind the strategy is also explained in dedicated videos as well. And so I'm sharing 100% of my recipe, how I made outperformance in the past and how I hopefully will continue to make that. I'm also sharing every single trade. For example, over here, this was a relative valuation short. So this was move relative to Ethereum. We were betting on falling prices at the time. And then within 3 weeks, moved underperformed ETH by 8.5%. And again, we're not looking for the 100x returns. We're just looking for above average constant compounding. This is a marathon, not a sprint. I want to make the decision as easy as possible, so there is a 1 week money back guarantee. So in case you don't like what you see, in case you don't like the strategy, in case you don't like my trades, just message me within the first week and I'll refund you the $125, no questions asked. A link to premium should pop up directly here on the screen. It will lead you to the website. If it's your very first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.